What's up, investors? Is the Russian dude, and according to Moody's, there are two significant factors or reasons which can and most likely will cause a pretty big stock market correction. Inevitably, it might even lead to a recession, but for now, whatever they're predicting is just a correction, which, if you know, is approximately the decline of the stock market by 10% or more. So, according to the main economist of Moody's Analytics, Mark Zandi, he is saying that yes, right now the market is overvalued. We do see that it is no longer a secret. Every single financial model forecasts and sees and proves that the stock market assets are overvalued. So yes, this is unfortunately, I would say, not something what we can influence. This is already what happened. What he is concerned is that the more overvalued the market, the bigger the decline will be in the future. Inevitably it will happen because, as you guys know, the stock markets are cyclical. Sometimes there is a period of growth which will always follow by a period of decline. And it is not just the regular assets which are currently overvalued on the stock market, like shares of different publicly traded companies. He basically mentions that every single asset class right now is overvalued, whether this be securities, fixed income assets, real estate, commercial real estate, private personal real estate, does not matter, residential real estate, even cryptocurrencies, gold, silver, every single thing right now, according to these models, is overvalued. And since we are expecting a period of decline in either near or distant future, once again, according to Mark Zandi, he sees at least two reasons which can initiate and trigger this period of decline. The very first reason which can trigger this decline he sees are the tariffs, which is the next president of the US, Donald Trump, is planning to impose on different countries, such as China, Mexico, Canada, and BRICS countries, Brazil, Russia, India, China, and South Africa. For some particular countries, like for example China, Trump is even proposing a 100% tariffs, which will without a doubt increase the prices of a lot of things, since China provides a lot of items for America. Well, this will without a doubt increase the prices for these things. And guess what? Companies are not gonna eat these additional costs. They're either gonna leave the American market or they're gonna transfer these additional costs to customers in the very basic form of obviously increasing the price of these products. So the very next time you order something from AliExpress or Alibaba or Temu, which originally costed like $15, now might cost $30, $40 or even $50. While remaining still same cheap item. And since a lot of items like this will be affected, this will definitely contribute towards the inflation. It is not that Chinese items will only be affected, other products, as soon as they see that the prices for Chinese things increased, they will be thinking like, okay, so if this is the cheapest option possible, it costs this much, we can most certainly increase our own prices because we have superior quality. Both of these things, once again, will contribute to the inflation. And the second thing which can trigger the period of decline, according to Mark Zandi, are also the proposed by Donald Trump mass deportations. Approximately 12 million people is what he was speaking about. This will without a doubt affect significantly crucial industries and sectors of the economy, such as for example construction, farming and agriculture, where a lot of immigrants are working right now. We also know that these people, they receive way lower salaries than, for example, if company is to hire an American worker. For this reason, if there will be a significant shortage of immigrants working in these sectors of the economy, the companies also will be forced to increase the salaries to attract American employees. I highly doubt that a 30-year-old healthy American would want to work for a bare minimum wage, doing the heavy lifting work 5, 8, 10, 12 hours per day. No, they would require a significantly higher salary, and obviously since construction cannot stop, the owners of these companies, the owners of construction business, will have to pay higher salaries. And once again, guess what? The final cost again will be transferred to the final consumer, to the buyers of this real estate. And since real estate itself also greatly contributes towards the inflation, well, it will be contributing then even more. As a result, what do we have? Tariffs will increase the prices of goods and services. The mass deportations will increase the prices for the labor of crucial sectors of the economy, such as, once again, agriculture and construction. As a result, almost every single thing, according to Moody analysts, every single thing around us, surrounding us, can increase in price substantially. It will be the final people, it will be the end consumers who will be paying the final price, so it will always, definitely, most certainly contribute towards the inflation. And when there is a higher inflation, guess what? There will be once again higher interest rates. Even though right now we only started the pivot, recently we do see some very first signs that again inflation started budging in the wrong direction and started showing a little upward momentum in some particular areas. Guess what happens if the rates are still high and inflation continues to increase? Well, the rates will need to be even higher, even though the economy was already struggling, but well, there will be no other choice. And these two reasons, according to Mark Zandi, is what can potentially trigger the stock market correction, potentially even recession or even more. Well, there you have it, guys. If you enjoyed today's episode, please subscribe to my channel for more videos like this. Thanks so much for watching. See you on Monday.